Topline is concerned, because we are working with a number of 27,423 crore worth of expectations. The consolidated net profit as well has come in at 972 crores versus 1,034 crore reported last year, and this is against an expectation of a growth of around 7%. We were working with a number of around 1,100 crore on the top line, and this is below the estimate as well. So as far as the top line is concerned and the bottom line is concerned, L&T has not delivered. But I was looking at the order inflow number, that has come in pretty strong. The order inflow number this time around has come in at 34,800 crores, and this is better than the expectations, given that we were working with a number of anywhere between 25,000 to 30,000 crores. Last year, the company had registered a number of 35,000 crores in terms of order inflows. So this comes as a positive surprise. I'll wait by to see what margin number look like as well. But as of now, the numbers are not looking good as far as the headline number is concerned. On the outlook, the company mentions that the global economic revival hinges on outcome of post-Brexit events in the UK, change in economic policy, etc. And that is what has led to the slowdown as well. In terms of the domestic growth, they say that domestic growth appears to take longer time as investment momentum remains weak and the banking system is burdened by debt overhang. Government's initiative to curb and parallel economy and make transition to cashless economy has caused disruption whose impact on the business sentiment is yet to be conclusively assessed. The challenging business conditions are expected to continue in the next few quarters until the government moves to lift through infrastructure spend and tax reforms take effect. So this is what we were anticipating, that top line might take a hit because of demonetization, but it seems that the impact has been far more than what we had anticipated earlier. I'm looking at the internals, and as far as the expenses are concerned, I do not see any one-off item that would have caused this miss on the numbers. In terms of the depreciation, that is a bit higher. The other income has come in line. Even the finance cost has come in line. So it looks like a top line miss by the company, wherein the revenue has just grown by a paltry 1.4%. If you go to the segment heads, infrastructure segment has not performed this time around. The number has come in at 12,734 crores in terms of the revenue versus 12,121 done last year. So no major growth coming from the infrastructure segment. The power segment has actually declined. The revenues this time is 1,600 crores versus 2,000 crores, and that actually seems like a problem. And that is why we are seeing the revenue miss from the company. In terms of the EBITDA has come in at 2,522 crores versus expected poll of 2,600 crores. And that is again drilling in from the top line itself, because expenses seem to be in line. So it's a top line miss by the company. In terms of the profits from the segments, it seems like infrastructure segment has reported margins of around 880 crores versus 780 crore done last year. Power actually seems to be a problem this time. So the profit from power segment has come into 12 crores versus 104 crore reported last year. And the other segment has reported a loss of around 110 crores.